What are 501c3 organizations and what are their filing requirements?
The IRS Internal Revenue Code Section 501c3 exempts organizations from federal income tax and allows them to receive tax-deductible charitable contributions. In turn, donors can deduct their contributions under taxes. Additionally, many states also exempt these organizations from sales and property taxes.
This is all well and good, but in order to receive these benefits, the IRS requires exempt organizations to file annual informational returns using the Forms 990s.
Unlike most IRS forms, Form 990 series returns are not tax forms, and their primary purpose isn't to report financial information, even though they do. They're intended to provide the IRS and the public information about the organization programs, activities, relationships, transactions, and governance, in addition to revenues, expenses, and assets.
These forms ensure organizations stay compliant with their tax-exempt status and are accessible for public review.
Forms 990s are required to be available to the public when requested. There are several versions of Form 990, and the form your organization files depends on the exempt organization's financial activity each year.
If your finances change, your form requirements may change as well.
Which form should your organization file? If you are a private foundation, you are required to file Form 990-PF, regardless of assets or income sources. If your organization has either $200,000 or more in gross receipts or $500,000 or more in total assets, it is required to file the longest form, Form 990. Gross receipts are the total amount received from all sources before deducting any costs or expenses. Smaller organizations with less than $50,000 in annual gross receipts can file Form 990N, also known as the e-postcard. This brief form takes only a few minutes to complete, but must be filed electronically. Finally, small organizations that have both $200,000 or less in gross receipts and $500,000 or less in total assets can use the Form 990EZ.
Smaller organizations can choose to file a full return, but they must ensure they don't skip any questions or required schedules.
Does every organization have to file? No. The largest category of tax-exempt organizations that doesn't have to file a Form 990 series return is churches. When should organizations start filing 990 forms? Every year after the exempt organization was formed. What is the due date to file Forms 990s? The 990 series returns must be filed by the 15th day of the 5th month after the end of the organization's tax year. That means if your organization uses the calendar year as your tax year, the deadline for 2024 filing is May 15, 2025. If the organization uses a fiscal year, the deadline for July 31st, 2024, for example, will be December 15, 2024. Can an exempt organization request more time to file? Yes. Any Form 990 or 990EZ filer can file Form 8868 to receive an automatic 6-month extension. What happens if an exempt organization fails to file or files incorrectly?
The organization may face steep penalties for failure to file.
As of January 2024, the failure to file penalty for most small and mid-sized organization is $20 per day after the form's due date, with a maximum of $12,000 or 5% of the organization's gross receipts for the year, whichever is less. Penalties for organizations with annual gross receipts exceeding $1,208,500 are $120 per day, with a maximum of $60,000 for each return. These penalties apply to filers of Form 990, 990-EZ, and 990-PF. Form 990 and filers aren't subject to late filing penalties. What can you do if you fail to file or you file incorrectly? First, correct your filing and file your 990 form. Then, complete Form 843, claim for refund and request for abatement to request penalty relief. It's always worth a try. Fill out the form and include a letter explaining the reasonable cause or reason for the late filing. What is automatic revocation? If an exempt organization fails to file for 3 consecutive years, it will lose its tax exemption status on the due date of the 3rd annual return or notice. It's called automatic revocation. Automatic revocation happens to all Form 990 filers. An organization that has lost its tax-exempt status through automatic revocation may be required to file Form 1120 or Form 1041 U.S. federal income tax returns and pay any applicable income taxes. In the next video, I will go over how to search for exempt organization financials in the IRS database. Thanks so much for watching.